Hello, everyone, and welcome to Finance News Weekly. I'm your host, bringing you the most important market moves from December 6th through 13th. Let's dive in. This week delivered major headlines. The S&P 500 hit a record high at 6901, then pulled back on tech rotation fears. The Fed cut rates for the third straight time, but signaled a pause ahead. And AI stocks faced renewed scrutiny after disappointing earnings from Oracle and Broadcom. Let's start with the Federal Reserve. On December 10th, the FOMC lowered its benchmark rate by 25 basis points to a range of 3.5 to 3.75%. This marks the third consecutive cut. But here's the twist. 3 members dissented, the most since 2019. And officials now pencil in just one more cut for 2026. Moving to equities. The S&P 500 reached a closing record of 6901 on Thursday, but fell 1% to 6827 by Friday. Why? Investors are rotating out of high-flying tech stocks and into value names. Despite the pullback, the index is still up 17% year-to-date. Now, what sparked this tech sell-off? Broadcom plunged 11% on December 12th after issuing a disappointing sales outlook. Analysts cite margin compression worries. The drop dragged down chip stocks across the board, fueling anxiety over AI infrastructure spending. Adding to the tech troubles, Oracle fell nearly 11%. The cloud computing company posted disappointing quarterly revenue and raised its capital spending forecast. Investors worry about rising debt levels and uncertain returns on AI investments. But not all chip news is bad. Nvidia reported record third-quarter revenue of $57 billion, up 62% year-over-year. Data center sales hit $51 billion. CEO Jensen Huang said Blackwell chip sales are, quote, off the charts, end quote. Fourth quarter guidance, $65 billion. In the banking sector, JP Morgan Chase warned about higher than expected costs and called consumers, quote, fragile, end quote. The stock fell more than 4%. This raises concerns about consumer spending strength heading into 2026. Here's a market flash. The Dow Jones Industrial Average hit a fresh all-time high at 48,704, and the Russell 2000 Small Cap Index jumped 1.3% to a record, fueled by Fed rate cut optimism. Retail investors are active. In the week ending December 10th, individual investors poured $7.8 billion into stocks, above the $6.3 billion weekly average. $6.3 billion went to ETFs, $1.5 billion to individual stocks. Tesla stock is trading around $447, up nearly 16% year-to-date. Morgan Stanley downgraded the stock to equal weight over valuation concerns, despite raising its price target to $425. Meanwhile, China's sales jumped 41% month-over-month in November. Apple closed at $278, with a market cap of $4.12 trillion. The company faces fresh antitrust scrutiny in Switzerland over iPhone NFC access and Apple Pay competition. Legal headwinds continue with the ongoing Epic Games case. Let's talk AI outlook. The global artificial intelligence market is projected to grow from $235 billion in 2024 to over $631 billion by 2028. Nvidia expects data center capital spending to hit $3 to $4 trillion by 2030. Quick sector spotlight on big tech. Microsoft's Azure Cloud grew 40% last quarter on AI demand. Alphabet is up 80% since July on antitrust relief and AI wins. Meta Platforms trades at 26 times forward earnings, making it the cheapest of the Magnificent Seven. Disney just signed a $1 billion content deal with OpenAI.
Taiwan Semiconductor is well positioned to benefit from the AI boom, with hyperscalers planning to increase capital spending in 2026. TSMC supplies most advanced AI processors. The foundry leader remains a key pick for chip exposure.
In commodities, oil prices tumbled. WTI crude fell to $57.68 per barrel, Brent to $61.07. Both are down over 19% from a year ago. The International Energy Agency forecasts a record supply glut, with global inventories at a 4-year high.
Bitcoin fell below $90,000, trading at $89,885 on December 11th. That's down nearly 30% from its October high of $126,000. Stablecoin inflows dropped 50%, signaling reduced market liquidity.
A few more policy notes. The Fed announced it will resume buying Treasury securities, starting with $40 billion in T-bills this Friday. This supports market liquidity. Meanwhile, Japan's 10-year bond yields hit their highest since 2007, as markets price in a potential Bank of Japan rate hike. Barron's released its 2026 top picks. Amazon makes the list for multiple growth engines, AWS, e-commerce, and AI initiatives. Visa gets the nod for resilient payment processing, and Bristol-Myers is highlighted as a turnaround value play with a strong pipeline and attractive dividend. One last note, the S&P 500 bull market is up 92% from its lows. Historical patterns suggest stocks typically keep rising in the third year of bull markets. Wall Street expects the index to reach 7968 in 2026, implying 16% upside from here.
Next week, watch for any hawkish signals from the Fed. Keep an eye on retail sales data and tech earnings follow-through. Energy investors should monitor OPEC developments, and crypto traders will be watching for any stabilization in stablecoin flows.
That's Finance News Weekly for December 6th through 13th. If you found this helpful, please subscribe and hit the notification bell. Thanks for watching, and we'll see you next week with more market insights.